Everyone. Thank you for tuning into today's Navigating Taxes update. Today's update is focused on the risks of sales tax automation misconfigurations and how to conduct a sales tax system audit to stay compliant. To guide us through these developments, we're joined by Scott Brawdy, tax principal at Honkamp. Scott leads our state and local tax practice and has more than 25 years of experience advising businesses across industries and navigating complex multi-state tax issues. So Scott, a lot of companies rely on automated sales tax tools, but can they actually backfire? Or what should businesses be careful about?
Thanks, Katie. I think the number one thing businesses need to be careful about is, okay, you've went through all this effort to put in a sales tax system and spent this money on the technology. But it's the old saying, right? Garbage in, garbage out. And so I'd say one of the most important things is getting that configured correctly in the first place. And then once you've got that in place, you want to perform, I think, regular internal audits, if you will, of the system. So the good news is that automation tools like Avalara or TaxJar and Vertex, they've revolutionized how we manage sales tax compliance because they calculate rates, track nexus thresholds, and even file returns automatically. But automation's only as good as the data and configuration behind it. So in 24 and 25, we've seen a big rise in audit activity triggered not by fraud, but by automation errors. Some examples that I've seen include misclassified products, incorrect rates. Our clients may not have their population of exemption certificates in place from all their customers, so they got gaps there. Because remember, any sale that the state considered all sales, they consider all sales as taxable unless you've got evidence that they aren't, and those certificates are a big part of that. And then sometimes we see cases where clients will overlook local tax rules at the local level. So when all these errors go unnoticed, they can lead to underpayments, overpayments, or audit penalties.
Okay, so can you walk us through what steps businesses should take to protect themselves?
Best way to protect yourself is to go through a sales tax system audit. It's a proactive review of your automation setup, tax data, and compliance processes. So what that looks like is, first thing you're going to want to do is review the product taxability codes. So in the software, if you think about all your offerings of products and services in your accounting system, you've got codes assigned to those, typically. And when we're installing sales tax automation like Avalara or whatnot, we're going to take your codes and then map them to proper tax treatment so that no matter what state you're filing in, those are handled appropriately. So we're going to, first thing you want to do is check how your products and services are classified. So for example, if you've got a SaaS product that you're offering, a software product, is that coded correctly in states that tax digital services? Or if you've got food items, are they marked as taxable or exempt based on local rules? Misclassifying even one product can lead to years of incorrect filings potentially. And secondly, if you've got exempt customers, you're going to want to validate their customer exemption certificates. So if you sell to tax exempt people, you want to make sure that you have valid up-to-date certificates on file. You want to store them electronically for easy retrieval. Most of our clients will either store PDF copies of those, or if they are using an exemption certificate management software, they will store those in the cloud at the software provider site. And you want to make sure they're matched to correct customer accounts, because missing or expired certificates are a top audit trigger. And then thirdly, you're going to want to reconcile your sales and tax reports. So you'll take a month and compare. You're going to run some reports out of that system that have all your transactions in there. So you're going to want to compare your sales tax reports to your GL, your general ledger, sales reports from your ERP or e-commerce platform if you have that. So some people are using maybe QuickBooks, but they're pairing that with like Shopify or something like that. So we do cross checks of those sales data between those platforms. And you want to compare that to your federal income tax filings, because one of the standard moves that an auditor will make when they're auditing you is they're trying to reconcile all the sales for the year that you've put on your sales tax returns against what you're showing for your income tax return. And there can be a million reasons why those numbers don't match, but we have to reconcile that. Maybe that's on accrual basis and your returns are on cash, or maybe you had bad debts that didn't go through. There's a lot of reasons. So you want to reconcile those two things to make sure everything's captured. Because any discrepancies are red flags for auditors. And then aside from the taxability, you've nailed down the taxability, right? And you've nailed down whether you've charged the right amount of tax or not. But are you filing in the right places? And so that's when you want to check your nexus tracking and registrations beyond that. So your automation tool should have some tracking in there about economic nexus thresholds in real time, but you'll still need to confirm that thresholds are set up correctly in the states, register in new states as soon as thresholds are met, and deactivate registrations in states where you don't have nexus any longer. Because failing to register or staying registered when you shouldn't can both cause problems for you. You want to test for rate accuracy. So run some test transactions across different locations in the U.S. just to make sure that state, county, and city rates are applied correctly and that shipping and handling are taxed appropriately. Some states tax that or don't. And then there could be special rules, like some states have a sales tax holiday for back to school, things like that. Clothing exemptions, is that handled correctly? Because even a small error rate can add up over time. And then you want to review your filing and remittance settings. Make sure that your software has the filing frequency set up correctly to match what the state says you should be on. For example, if it's quarterly, make sure they're filing quarterly. Make sure it's remitting the payments on time, accounting for any prepayments or credits, and just making sure all that's in place, because late filings, as you know, can trigger a penalty like anything else. And then finally, just to wrap it up, I want to say you want to document everything. You want to keep digital records of tax returns and payment confirmations, all your exemption certificates, as I mentioned. Your sales tax system is going to have audit trails in there, so just make sure that's being documented okay. And then if you're performing your sales tax compliance in-house, we recommend kind of documenting your policies and procedures, maybe like a desk book, if you will, so that your colleagues can step in for you if something goes wrong or there's some issue to diagnose. So, and also, this documentation is your first line of defense in an audit, because one of the first things that happens in an audit is we have a pre-audit, well, it's called an opening conference, and that's where you and the auditor discuss the shape of your records, the form they're in, and you guys work together to come up with an audit plan. So your documentation really needs to dovetail with how that audit plan is going to work, so that neither you nor the auditors put out an excessive amount of work on it.
Okay. So it sounds like there are a lot of steps and a lot of work involved behind each of those for businesses that they need to take in order to protect themselves. So what should companies take for ongoing compliance then?
I think there's a few things you can do to keep your system running smoothly. I would schedule periodic internal audits of your tax setup. How frequent those are, I think would depend on your specific situation. Maybe the size of the business could affect that too. You want to train staff on taxability rules and exemption handling so that they're comfortable and confident in how they're interacting with customers. and you want to subscribe to a state tax update, the updates to stay ahead of law changes. So many states, you can give them your email address and then they will send bulletins out to you periodically. That can be a lot of states, and you could be flooded with your inbox there. At Honkamp, we follow all states just as a matter of course, and we periodically will send alerts out to our clients. So what I would recommend to clients that are listening to this or prospects is log on to our website, put your email address in there, and get on our mailing list so that you're apprised of any changes that come down the road. And just as an extension of that, I would say work with a tax advisor to review your automation. And remember, it's a tool. It's not something that we just set one day and forget. Remember, old me, 25 years ago, we didn't have economic nexus to think about, or well, I guess we had the internet, right? But not AI, certainly. So things are never static. They're changing. And so your best bet is to work with a seasoned tax professional that has seen it all, really, and is used to working with this.
Mm-hmm. Sure. And backing up to Scott, you had mentioned if people are interested in learning more or wanting to get on the mailing list, just make sure to visit our website at honkamp.com, where you can sign up to receive more information. So with that, thanks, Scott, for sharing your insights on this important topic. That does it for today's Navigating Taxes update. If you'd like help conducting a sales tax system audit or evaluating your automation tools, reach out. We're here to help.
Thanks, everyone. Again, I'm Scott Brawdy. Stay automated, stay accurate.